Hello everyone, this is Nick Perry with your chart slideshow for Wednesday, October 4th. Today I am back for my weekly check of the broad market indices. In last week's chart slideshow, we saw that the SPX and the Dow had broken above resistance, the comp had bounced off support, while the rut was continuing to lag this recent uptrend as it traded below resistance. The overall takeaway was that the uptrends remained intact. However, the indices were pushing into overbought territory, and I was talking about the possibility of a pullback. When we look at this week's charts, we see that the pullback scenario didn't really play out. There was a very small blip here and here on the SPX and the Dow. The comp, it did offer a small pullback, but these are not the type of pullbacks that I was talking about, where we saw potential moves back to the 50-day moving average. Meanwhile, the rut is sort of stagnating here as it gets rejected at the 740 level. As far as the overbought readings are concerned, I want to turn your attention to some comments I made in the blog on Friday. This is when I was talking about the SPX, and this is an excerpt from that post. While a pullback is usually associated with overbought readings, a chart can work off an overbought reading with a sideways drift. In my experience, the drifts tend to be indicative of underlying buying strength. The SPX hasn't yet consolidated enough to work off that overbought reading, but that is a scenario to keep in mind as we head into next week. Basically, what this is saying is that when you get an overbought reading, there's two ways for it to work out, and the pullback is usually what we think of, but there's also what's called a time correction. Basically, you see a churn, and the nature of the overbought readings are they're relative to themselves. If you just get a sideways drift, the advance gets a time to rest and basically allows buying demand to sort of be built up again. So that's it. When I posted this on Friday, we were still sort of flirting with overbought readings. We've now kind of come back from those. If you've been reading the blog over the last few days, we've kind of talked about that. And yesterday, I was kind of looking for the potential to see a bounce since we had worked off some of those readings. So, turning back to the charts, I wanted to sort of touch on that because we've seen these uptrends. They are extended, but they're not. We haven't seen the sort of blow off top that you see at the end of an uptrend. That doesn't always happen, but it can. Right now, we just see a steady sort of progression. The interesting aspect is that when we have pushed into overbought readings, we haven't seen the abrupt pullbacks. We've just seen sort of these consolidations. That doesn't mean we still won't see a pullback here to the 50-day moving average, but the other scenario is that we could just see a consolidation and see the moving averages sort of catch up and allow these indices to sort of work off the extended nature by simply just consolidating. So my overall takeaway is that so far the uptrends remain intact. I've been calling for a snapback rally in the rut, and so far I've been dead wrong on that. It's been the other indices that have taken off. So I'm still keeping an eye on the rut and trying to figure out whether it's just marching to the beat of its own drum or whether that group is actually seeing outflows and we're going to see the other indices take off. But the overall picture is that we are a bit extended on the upside, but the uptrends are still intact. So stay tuned to the blog for further updates.